Hello again, and thanks for joining us for the fourth session of the day. Again, I'm Shakina Tawahena, Commercial Editor at Mortgage Solutions, for those of you who haven't seen me yet, and I trust you're finding the day insightful so far. This session will be about consumer duty and what the changes might mean for you as an administrator. As usual, there'll be a Q&A session at the end, so feel free to ask your questions in the box on your screen throughout the session. So I will now pass over to Tony Crane, founder of Crane Consulting, and Stacy Penn, Senior Policy Advisor at Amy, who will be presenting this session. Thank you.
Morning, everybody. Thanks for joining this session. So my name is Tony Crane. As Shakina said, I'm founder of Crane Consulting. So I've been working with the FS industry for 25 years now, and most specifically for the last couple on consumer duty and consumer experience. So the first part of this session will be just a background to what consumer duty is and what the regulator is looking for from the industry. We may also occasionally put polls into the chat, so feel free to respond to those, and we'll pick those up as we go. But initially, if we just look at what consumer duty is trying to do, and I think there's a couple of bits I'd make in regard to duty. One is a substantive change for the financial services market. You could argue that it's the biggest change that the market's ever seen, and I say that because in my 25 plus years in the industry, there's not been many occasions where a single piece of regulation has impacted across the whole of the industry. It's typically been into product silos in the past. And secondly, the scope of the changes are significant. So the regulator is looking for effectively a cultural change within the industry, and there's a caveat to that says there'll be different parts of the industry that will be expected to impact or instigate those cultural changes to different degrees. In my view, the mortgage market, and certainly the standard mortgage market, is already at the better end of the financial services space. So arguably there'll be less impact than maybe in other areas of the market where there's higher risk transactions occurring. But nonetheless, we're all going to be expected to consider what culture change means for us individually, and also what it means at a firm level. I won't go through the quote on the screen, but it gives you an idea of the significance the FCA are putting behind the initiative. The other point I'd make on duty is that it's trying to deliver and trying to really focus the market on delivering good outcomes and avoiding foreseeable harms. And the whole structure of the regulation is geared to deliver those two objectives. So underneath that overarching consumer principle of deliver good outcomes, the regulators set out four distinct measures or tools and rules that we can use to measure those outcomes. One is around consumer understanding, one's around products and services, the third is around consumer support, and the fourth is around price and value. And I'll go up into a bit more detail on those on the next slide. But effectively, what the regulation is trying to ensure is that lenders, manufacturers, distribution firms, advisors, and everybody within the value chain, including servicing entities, are all focused on delivering the same thing, which is the right outcome for the consumer at the right time. Underneath that, and in a bit more detail, I've highlighted the key elements of each of the four measured outcomes, and I'll just walk through this in a more logical sequence. So if we start with defining the target market, so every firm, as I say, whether it be manufacturer or advisory firm or distribution entity within the value chain, is going to have to define in written format who their target market are, what the characteristics are of those customers within the target market, and also who the negative target market are. They're then going to be expected to ensure that those consumers within their target market and those consumers with the different characteristics within those target market, including those that are vulnerable, understands the products and services that are being provided. They're also then going to be expected to ensure that the firm provides the right amount of support to ensure that the customers with those characteristics get the outcome that's desired. And then finally, the expectation that the consumers, irrespective of their characteristics, if they're in that target market, all customers receive fair value. and that's effectively the balance between the benefits of the product versus the cost of the product to the individual consumer. So whistle stop tour of a fairly in-depth piece of regulation, but hopefully it does simplify things a little bit and remove some of the myths around duty being this all-encompassing behemoth that's going to fundamentally change the way the mortgage market operates. I don't think it will, because I think we're in a good place already, but hopefully that gives you a bit of a background. Stacey, over to you, I think, for your piece.
Yes, thanks, Tony, and good afternoon, everyone. So I work for the Association of Mortgage Intermediaries, and we're a regulatory and lobbying trade body, and I've been involved in consumer duty ever since consultation and all the way through to where we are now. And I think Tony made a great point around how consumer duty is unique in the sense that it applies across all of retail financial services. But I think it's important as a sector for us to step back and realise that the FCA is not looking to tar every firm with the same brush. They're looking to raise the overall standards across retail financial services because they're still seeing too many instances of poor consumer outcomes. And as Tony's already said, I think we are starting from a really good place in the mortgage and protection sector. And I actually agree with what Tony said around it's not going to fundamentally change the advice process. We've still got the regulatory requirements that sit within the different regulatory source books. So that won't change. I think where it will change, and I know this is something we will get on to discuss in a lot more depth later, is around culture, mindset, and kind of day-to-day processes and procedures. And in terms of protection as well, I think, and I'm really hopeful actually, that it will see a shift in protection conversations. I think particularly where mortgage firms are saying that they do and offer protection, they need to really be thinking about the quality of those conversations and how they can make them memorable and meaningful so that customers essentially are equipped with enough information to understand their options, so that at the end of that conversation, they can make a decision and think, yes, I want to purchase protection and I understand what I've bought and why. Or if they haven't bought protection, they walk away from that conversation knowing the risks and implications. So I think that is the shift there in terms of protection. But yeah, generally, it's, as I said, it's not going to drastically alter the advice process. It is more around making tweaks and looking at where there are opportunities to improve that process, that customer journey, and ultimately the outcomes that they receive.
Yeah, thanks, Stacey. So we've got a poll out at the moment, which is underway. So feel free to. I'll leave that out for a couple more minutes, and then we'll move on. But I think the other bit, just to add on from what Stacey said, from an administration perspective, I think the two key aspects are the support, understanding, and evidence. So one area where I think we do need to get better, and that's when I say we, I mean the mortgage advice market, is around documentation and evidence. There's a much higher bar now in terms of firms evidencing that they've identified risk, they've put appropriate actions in place to handle that risk, and they either then mitigated it completely, or it becomes a business as usual risk that they continue to monitor. Those thresholds existed in the past, but I think duty just really puts a spotlight on that for two reasons. One, the lack of evidence now is going to be a problem. So the regulator is no longer going to come looking for signs of inappropriate activity. They're going to be expecting the firm to be able to evidence that they're doing the right thing. So that changes from a reactive to a proactive. And the second point, and what we all need to be conscious of, is that clearly the higher the bar, the more likely there are for complaints, the more likely that claims management firms start to look at different areas of the market. And again, I don't think that's a concern for standard mortgage market, but you can imagine that high cost credit, payday loans, etc., are going to have specific challenges around fair value, or they're going to have a job to evidence fair value given some of the prices of the products in that space. I'll close the poll now. So, Stace, I don't know if you had any further thoughts in terms of the specific impact on the administrators.
Yeah, so as I mentioned, I think you can kind of split it into two categories. You've got changes that administrators might see or are likely to see at a business level, and then you've got this cultural and mindset part. And I'll share some views on that, and we can certainly have a discussion on that. So I think at firm level, as administrators, what you may start to see in terms of day-to-day changes is that there may be amendments to business documents, so things like the initial disclosure document, suitability recommendation letters, and all of that is being driven by this consumer understanding outcome, where the FCA wants firms to think about how their communications actually work in the real world. So I know from speaking to a lot of firms that is one area that they're looking at. They're reviewing the documents. So that might be something that you'll see when you are dealing and you're involved in those documents. There may also be changes and tweaks to processes. So if we have a look at the avoid causing foreseeable harm cross-cutting rule that sits under consumer duty, some firms might be thinking about where customers are coming to the end of their fixed rate mortgage. They're looking to put a policy in place to ensure that all customers are contacted within a certain amount of time before that expires. So it is around firms thinking about how they can create these consistent processes to make sure essentially that no customers are kind of falling through the net. And then another example of how I think it could change at a business level is this compliance aspect. So if any administrators are involved in that side of things, there will be that consumer duty lens that the business will need to apply. And again, this is because of this change from treating customers fairly, which looked very much at inputs, to acting to deliver good consumer outcomes, which, as it suggests, is looking outwards in terms of what customers receive. I don't know, Tony, if you wanted to talk a little bit about the culture and mindset part.
Yeah, I think it's a really important bit. I think, and it's interesting in the poll that there are people, not just on this call, but I think across the industry, that are genuinely a little bit worried about what the implication of this culture shift might mean, and it almost implies that something's wrong because we have to have a significant change. And I don't think that's necessarily the case. I think it's more, and I describe it as being risk confident. So in my experience, certainly within the lender world, there's almost always been this assumption that sort of a low risk approach means we're not taking any risk, and actually that's not the case anymore. So low risk doesn't mean no risk, because we've now got to identify different consumer groups that are clearly going to have different needs, specifically those in the vulnerable areas, and therefore our individual responsibility is to ask our firms difficult questions, make sure that when we're talking to consumers and we're picking up little tidbits that they might not be 100% okay, or they might not be completely understanding of what we're doing or why we're doing it, that we aren't just dismissing those, we're capturing those somewhere, and then we've got a mechanism internally to share that information to ensure that we've listened, and that if at any point the customer comes back and queries why we did certain things, we're not saying, oh well, we didn't think it was important. We've got a method where that frontline feedback can ultimately end up changing policy, processes, systems, and in some cases products. And I think that's that personal responsibility bit that maybe hasn't been felt throughout the whole of the business line historically. the senior manager regime's obviously brought in significant consequence at the exec level. But in many ways, consumer duty brings a similar level of responsibility now at all levels. And we're not talking whistleblowing, we're talking a responsibility to the customer that you're talking to or dealing with, to ensure that the firm is doing everything it possibly can to make sure they get the right outcome. And if there's instances where that isn't happening, then we've all got responsibility now to flag that. And that's when I say risk confident, it's a personal brand risk as well as it is a firm risk. So what do you individually stand for? What do you individually hold as your ethics and values in the way that you want to behave within the industry at this point in your career, and also at future points in your career? And that's the same for me as a consultant. So obviously I'm out and around the market, talking to lots of different firms, seeing things that are great, and then other times seeing things that I'm not comfortable with. And I have exactly that challenge of how do I simultaneously manage commercial relationships while complying with a principle that says if you see something wrong and firms aren't doing what they should be doing, you need to report on that. And I think that's really what the culture shift is about, that accountability at an individual level, that we all hold mutually each other's feet to the fire, and the fire is the right outcome for the customer. And that's not a quick, easy transition, but and hence it's a big change, but it's an exciting one, because ultimately I think if you do the right thing, you'll get the right results, and that can only be a good thing from a career perspective.
Yeah, and just touching upon what you said there around the shift, I think the FCA really is looking for that feedback loop, aren't they? And administrators and those at the front line play a really important role in capturing, like you say, that insight and feeding it through, and then that will lead to hopefully the business looking at where there may need to be changes made and tweaks, rather than collecting data, which can happen at the moment, and information that just sits there and there's not anything really meaningful done with it.
Yeah, exactly. And I think the other important point to stress is the responsibility now extends beyond just the point of acquisition or the product purchase. So we're being asked to look at what's the right outcome at the end of the relationship. So that might be, for a mortgage broker, the end of a transactional piece. The broker might be making a decision that they're going to run with ongoing servicing, and they're going to meet every 2 years, or they're going to meet every year, or what, the lender's saying, well, actually, for me as a lender, the customer needs to pay back the loan. That's the best outcome, is they own the house outright if that's what they want to do. So it's extending this responsibility far beyond purely the regulatory aspects of a product purchase, and it's about how does that balance between the proposition in its entirety that the firm is offering play against the consumer outcome and the cost of that outcome for each individual, not each individual customer, each group of consumers. Because again, I stress the point that when we're talking target market, we're not talking down to an individual level. We're saying the characteristics of groups of people with similar socioeconomic backgrounds, with financial literacy backgrounds, with whatever that might be, however the firms choose to define their target market. And that has to be more than just, senior managers looking at Excel spreadsheets trying to work out what the data is telling them. It's going to have to come from frontline colleagues who are dealing with and answering questions every day of the week. So the control and I use the word power, and the responsibility that is now on that frontline staff, it is significant, but it ought to be an opportunity, because you're going to be able to demonstrate really clearly what value you add to the customer, and that's really what consumer duty is all about. And if we've got some other questions we want to throw in.
Yeah, of course. So thank you both for your presentation and giving a brief overview of what the consumer duty might mean for the mortgage market and administrators too. And on the point that you made, Tony, about it being more of a personal responsibility, sort of bringing it down to that level, we do have a question from Ruth Dobson, who asks, ultimately, what is the best thing that case management or admin staff can do to implement a high standard of consumer duty? So I can put that both to you, but Tony first.
Yeah, so I think listen. The first bit, and it sounds really simple, but I'm a big believer in keeping things as simple as we can. It is listen to what you've been asked to do from your senior managers, and more importantly, listen to the customers. So we're going to get administrators are going to get feedback on every single call, in whether it be explicit or implicit. There's an opportunity to gather insight from every customer interaction, and that for me is the most important bit, because ultimately the best people to tell us if things are going well are our customers. It doesn't, we can do whatever else we want to do, we can create fancy products or do whatever we need to do in that regard, but the customers will tell us whether it's working for them or not. And so listening to the consumer input, asking for their input, and then considering how you individually or you collectively as a group of administrators want to collate that information and feed that up the line, because it is difficult. Feedback's difficult. It is a skill. It's not something that everybody is willing to do. So ability to do that either anonymously or collectively in a session, but just thinking about how that process is going to work. So you're going to listen to the customer, going to listen to my colleagues, and then individually and collectively decide what I want to do with that information. There's lots of material out there in terms of duty and what it means, etc. The FCA podcasts are really good. There's transcripts as well if you don't want to listen to it all. But yeah, for me, it's listening. That's the key. The key aspect of duty is listening.
Yeah. And Stacey, you have any thoughts on that as well?
I think Tony's covered a lot of it, but I'd also add around don't be afraid to ask for further support from the business. So if you feel you're not getting adequate training on this, or you feel like you're not quite sure about what you're meant to be doing, if anything, differently, and how that translates through to the day-to-day role that you have, then definitely ask and speak out, because firms should be providing training to their staff on what consumer duty is and how it affects their role. Again, it links very much to what Tony's saying around that confidence piece, which I know is not always easy.
I think I'm just picking up on one of the other questions. I think the other bit in there is that I'm a firm believer that it is highly likely that any frontline staff member in any product vertical is probably doing what they need to do right now for consumer duty. They're just pretty much not recording it, or it's all soft skills. So we're having good conversations. We're caring about our customers. We're empathetic. We've moved on from the days of 2005-6 when cultures were really poor. So we're likely to be doing all the things we need to do. We're just not documenting it. So one thing I would say is, as you're going into the goal setting period for this year and you're having those conversations about what might happen and what your performance might be, duty should be an integral part of those discussions. And if it isn't, then I think that's a good opportunity to challenge. If you're not having those chats with your line managers on a one-to-one basis or in your monthly or quarterly reviews, then that's a good opportunity to sit down and say, well, actually, this is what I think it means for me. Because it's not all top down. It's ultimately about the frontline staff who are dealing with the customers, making sure that their customers are getting what they need. And so there's an interesting power shift for me in terms of where you're almost inverting that triangle now that says that the leadership team and the execs need to support everybody else in the business to do the things they're already doing, because in the main, they're doing a great job today. Yes, there are parts of the market where that isn't the case, but mortgages isn't one of those markets in my view.
Yeah, of course. And you did bring up documenting what is already being done. So what can mortgage administrators do to document and show that they are complying with consumer duty?
So I take a really quick example that I gave to one of the mortgage lenders, and they said, well, how do we put consumer duty into our goal setting structures? Well, the easiest way is to change mortgage sales into outcomes, right? So you can say, yes, I've sold 7 mortgage products, but you can also say I've helped 7 people buy their first home. it's the same measure, but the outcome is the one that the customer doesn't care about them. They want to buy they want to buy their home, they want to do whatever they want to do with that lending. So changing the way that things are recorded, changing the narrative and changing the language is as much as part of changing the culture as the bigger stuff around how do we record this, what does the data look like. So everybody individually on this call will be able to, I suspect, change their current targets into something that better reflects what the customer's trying to achieve.
Yeah, of course.
And that is a great starting place, right? Just think about it yourself of what my customers actually asking me to do, because they're not asking me for this mortgage, they're asking me for number 3, Evans Court or whatever the address might be. That's what they really want. So let's focus on that, and then we're aligned to delivering the same thing.
Yeah, definitely. And Stacey, I'll ask this question to you. So how can administrators make themselves more aware of any potential causes for concern?
So I think it does come back to what we've been saying already around insights and looking at where there's feedback coming in from customers and what that indicates, or are there trends. And for an example, if you have got customers coming to you saying they don't understand a particular communication, or when you're speaking to them you realize they're not really doing what you'd wanted them to do from that communication, that kind of information can be really, really useful around whether that indicates a concern to the business. So ensuring, like we've said already, around feeding that back, I think is key.
Yeah, for sure. And Tony, I put this question to you actually. So you do say it is about personal responsibility, like you mentioned. So when this does appear as an issue to an administrator, do they need to refer the concerns to their firm, or they can report directly to the regulator, or does it depend on the circumstance?
Yeah, no, I'm not. I don't think we go straight to the regulator immediately unless it's something really bad. But yeah, initially it's up through the line. So from my perspective, a good practice would be each firm would have a mechanism now to collect what is effectively feedback from the front line and then evidence that they're actioning that. So it's not just about passing the feedback into the business. It's about saying, okay, and did you act on that? Because if we're flagging things that we believe as frontline staff are having a detrimental effect on the consumer, and the firm isn't doing something about that, then there is an escalation point at that stage to say, okay, well, if your line isn't doing it, it needs to go ultimately into consumer duty champion, who will sit at board level and have the ultimate responsibility for signing off that the firm is culturally aligned to consumer duty. And clearly, if they're not they're not instigating change on the back of feedback, then that might be an indication that they're not taking it in the way the FCA is expecting them to. Now, I'm not saying that they have to do everything, because clearly there's some stuff that they might not want to do, but that dialogue that says, look, we've flagged this now 5, 6, 7 times, nothing's changed. Why is that? That deserves a response back from the firm, and it's then closed down, or it then needs an escalation. And ultimately, the whistleblowing policies are there. So there is still that route in. I hope sincerely now that the whistleblowing would partly reduce because we've got a better dialogue internally at firms. But ultimately, it is still there if people feel that the issue is severe enough to warrant FCA notification.
Yeah, of course. And I'll put this question to Stacey. So what training can an administrator do to brush up on their understanding of consumer duty, aside from what training their firm might offer?
Yeah, so there's lots of resources out there. And that's been the great thing with Consumer Duty. There's been so many events like today that's been going on over the last 12 to 18 months. And I know Tony's mentioned them already, but the FCA podcasts, I think, are really, really useful. In particular, I'd say for this audience today, the Consumer Understanding, Consumer Support one. And that really just talks through what the FCA is aiming for. And I think it really brings it to life. And you can listen to it, or you can read the transcript if you prefer learning in that way. And then it's also looking at other resources. So I will just mention, as a trade body, if you are a member of AMY, we've got a lot of fact sheets that we've created on consumer duty, again, to try and break it down and to try and make it relevant for our sector, because the FCA has had a difficult task, I'd say, in trying to apply this across the whole of retail financial services, from the largest of firms to smallest of firms. So it can be quite hard to see through all that information and pull out what's relevant. So there'd be my two areas that I'd suggest.
Yeah, definitely. And Tony, I put this to you. So, how much on a sort of minute level will consumer duty change the day-to-day role of an administrator?
I don't think it would change the role hugely, unless the administrator. So actually, I'll row back a little bit on that. So I think an administrator can use duty as a bit of a Trojan horse to create a brand for themselves around customer. Alternatively, if that isn't the way that the administrator wants to go and actually they're quite comfortable with where they are, I don't think it would change the role significantly at all, because I think they're already doing 85-90% of the job is just around the evidencing of it. So I think for me, you can make consumer duty whatever you want to make consumer duty. You can make it a hassle, you can make it an opportunity, you can use it to really think about where you can add value from a consumer and firm perspective, or clearly you can ignore it completely, which is probably not where we want to be, but it's an option. So I think it's entirely down to the individual. I'd hope that, because the mortgage market for me is one of the shining lights within the overall financial services sector, that we do grasp the nettle and we do use it to continue to drive innovation and continue to do the right thing for customers. But ultimately, that is the challenge that's being laid at our feet by the regulator. Is if you want to do this properly, prove it, show us. And I think that's the same for the administrator. You've got an ability now to really influence how your firm behaves and structures itself going forwards. And those opportunities don't come along very often.
For sure.
Just touching on that point, actually, around adding value, one area we haven't mentioned yet, but I think administrators can really add value to this area, is around vulnerable customers, and in terms of identifying vulnerable characteristics. But one step further, because I think there is a worry that if we just focus on how many percentage of customers are vulnerable within your customer base, that's not going far enough. Administrators need to be thinking about, well, what support are we providing? How are we creating this kind of safe space where customers feel comfortable to talk about what their needs and the support that they want, and crucially how that's going to be recorded. And I think administrators can play an important part in that, in making sure that they're recorded on the file, that the customer doesn't have to go through that process of repeating the information again if they deal with someone else. So I think that's one area I'd pull out.
Yeah, and actually, slightly on that, if in the unfortunate but hopefully unlikely event that there is a poor consumer outcome or harm has been caused, what steps can be taken to rectify this? And yes, Tony.
Yeah, I mean, if duty triggers properly, that shouldn't happen. So there's been a failure somewhere. If a foreseeable harm, right? We need to be clear, it's foreseeable harm. And this doesn't mean, well, I'm going to take mortgages as a good example of that. So it doesn't mean that there's not going to be any repossessions. That's a harm inherent in the product, and under duty, that's fine. They see it's not fine clearly, but it's allowable. This is about where firms have either omitted to do something or deliberately done something that has caused a foreseeable harm for the consumer. If that has happened, you'd hope it wouldn't, but it goes back to this point of there's something's failed in the process. We are going to have to rectify that if we do see signs of that. But that comes back to this confidence bit again of, if something doesn't feel right, raise it. And I don't mean that from a fraud or, except if the customer's not responding in the way that you think they should, or that you expected them to, or they've responded before, it's okay to ask them if they're okay. And it's okay also to tell the firm that they might not be okay, because it's that communication bit that ultimately means we don't cause the foreseeable harms. The only way they do occur is if we haven't listened or we've not done the things we agreed to do as part of the implementation plan. So it's a bit of a get out of jail, sit on the fence answer, but we have, if there's a foreseeable harm, we've collectively failed.
Of course, and hopefully that doesn't happen.
Yeah.
Yeah, and thank you both. That is all we have time for, I'm afraid, and we have run slightly over time. But thank you both for your presentation. I'm sure there's a lot more to discuss on this, but unfortunately we have run out of time. But hopefully everyone found it informative, the topics that we did get to touch on. And the next session will be at 1 p.m, which will be covering the topic of mortgage fraud. And thank you again to Tony and Stacey for joining us for this session. And I look forward to see you later. Bye.
Have a good day all.
Thank
Bye.
you. Thanks. Bye.